Everyone's talking about the next big crypto move. But if you're only looking at charts, you're missing the bigger picture. In 2026, we aren't just looking at lines going up. We are looking at a fundamental shift in the global financial system. The Fed is moving from tightening to easing, and for the first time in history, the institutional floodgates are actually open. Today, we're breaking down why 2026 could be the year the macro stars finally align for a massive bull run. Let's talk quantitative easing, or QE. For the last few years, the Fed has been doing the opposite. Quantitative tightening, sucking money out of the system to fight inflation. But as we head into 2026, that narrative is flipping. When the Fed eases, they lower interest rates and inject liquidity back into the markets. This makes borrowing cheaper and cash less attractive. Investors start hunting for risk-on assets. Historically, when the money supply, known as M2, starts growing, Bitcoin and Ethereum don't just follow, they lead. But here's what's different this time. The pipes. In previous cycles, it was hard for big money to enter. In 2026, the infrastructure is built. We have spot ETFs for Bitcoin, Ethereum, and potentially even Solana or ADA. Institutions aren't just testing the waters anymore. They've integrated crypto into their standard portfolios. We're seeing pension funds and massive wealth managers like JP, Morgan, and Vanguard allowing their clients to allocate 1 to 5% of their net worth into digital assets. When that QE-driven liquidity hits the market, it's going to flow directly through these regulated ETF channels. Now add in the macro backdrop. Global debt is at record highs, and the 2024 halving supply shock is now fully felt in the 2026 market. This is a scarcity meets liquidity event. While fiat currencies are being devalued through money printing to manage debt, Bitcoin's supply remains fixed. Analysts are already eyeing $150,000 to $200,000 targets as a real possibility. Is it a guarantee? No, macro volatility is always a risk. But the engine for a bull run, liquidity, institutional access, and scarce supply, has never been this primed. The 2026 bull run won't just be about hype. It'll be about the return of the money printer and the arrival of the institutions. Are you ready for the wave? Let me know your price targets for 2026 in the comments below. And don't forget to like and subscribe for more macro breakdowns.